Hello everyone. So in this video we're going to talk about invoicing. It's all about invoicing your customers. So I have two charts here. So this comes from your QuickBooks Online. When you click plus sign, this is what you get. So this side is all has to do with the customer invoicing, receiving payment, issuing credit, uh, and also estimate. So the first thing is when you want to start invoicing your customer, you go here. So you basically invoice your customer on credit. So invoice it and uh, you send out invoice by email or by mail, and they will make a payment in 30 days, 15 days, whatever times you offer. And then you receive payment. So this is where you go, receive payment right here. So when you receive payment, you have a couple of choices. Do you want to directly deposit money to the bank or deposit to undeposited funds? Well, what is this undeposited funds thing? So undeposited funds is like a clearing account, bank clearing account. You just got the check from your customer, you haven't deposited to your bank. So then you put that under undeposited funds, and in a day or two you will have a bunch of checks. You write one deposit slip, and then you go to the bank and make deposit. So it's basically you once you receive payment, it will clear your invoice as paid, and then it sits here for a while until you deposit to the bank. So that's about it on the invoice side. And on the sales receipt side, what is sales receipt? So you just invoice your customer just like this, but in this case, you already received the payment. So invoicing and receiving payment at the same time, which is like combination of these two. And in this case also, you have received check or credit card payment or debit card payment, all forms of payment, but you still have to show deposit to your bank account. So this is where you come in. So basically, it's this. Here's the summary chart. So you invoice your customer and let them pay it within a certain time. You get in 15 days, 30 days, this time frame to make the payment, and they will send you the payment. You receive the payment here, and when you do this, it basically sits in the undeposited or clearing account, and then if it's checked, then someone has to go to the bank just because you receive the payment. You know, someone has to go to the bank and make deposit. Most likely, if you have more than one check, you will make one deposit slip and combine all bank deposits here. So, so what's this match downloaded transactions? So normally you also download your banking transactions, and in there you will see match, add, or transfer. So since you've already invoiced, received payment, and bank deposit, you don't want to add anything. You just want to match the total deposit to whatever you have in here. So when you reach at this point on bank downloaded transactions, all you need to do is match. Don't add. If you add it, then you'll have duplicate income. You'll be recording income twice. That's not good. So basically, if you are downloading, don't add, just match. The match amount should be the same as the amount you are depositing from here. So we'll go to that a little later on. You will see what we're talking about here. So it's 1, 2, 3. Where do you get that 1, 2, 3? 1 is here, 2 is here, and 3 is here. That's the case on invoice. And how about sales receipt? Sales receipt, 1 is here and 2 is here, same thing. And if you have product returns and the customer paid by check, then you go in here and you see credit, and then you have to write them a check. You write them a check from here. And if it's a sales receipt, use a original sales receipt that is paid by, let's say, a credit card or something, then you come here and you see refund receipt. Okay, so that's the basic thing here. So once you learn all this, then you will know how to invoice your customer. Okay, let's go to QuickBooks Online Plus. This one is QuickBooks Online Plus. This is the latest one, Harmony, and I'm already logged in. So if I click this, you know what I'm talking about now. So here is invoice. Just click this one. So here's your invoice form. The first thing you need to do is you need to know who you're going to invoice. Let's say in this case Dale. You're going to invoice to Dale. Well, how do I set up Dale here? So it's basically, you can just say add new and set up Dale right here. So just add new, you'll get something like this. Just put Dale in here, and if you want to put in more information, you click in here. You'll get a customer information page, so fill out all those and save. Okay, and then this one is optional. If you have a sales rep that get commission on all the sales, you can put someone's name here. Let's just select the customer is Dale. It's a customer Dale. Normally you will have a billing address, since you have to either email or print it. The print is right here, and so it's better to fill out all the information right here. Okay, let's just say the salesperson's name is Joe. So Joe gets commission on sales, and so you need to know the product you want to sell. So by the way, this company is set up for, let's say, for example, selling phones, Apple phone, Samsung phone, for example. So let's just say you want to sell iPhone 5C here. I've already set up product iPhone C in here. So let's say the price is $549, quantity is 1, and let's say another one here, 5S, and the price is $649.99. Okay, so as you can see here, right now it looks like it fits only 2, but that's not the case. It's an add line, and then you can select another one. Well, how do you select another new product here? Let's say you want to sell a Samsung product. Let's go to setup, add new. So let's say the name of the product is Samsung Galaxy. Okay, so we're gonna sell Samsung Galaxy. This is our new product line. Just paste it here. And so this is our inventory. So you have to click inventory here, right here. And if it's just like a service type, then you don't do anything. Just put in the price here, and you can just, if it's a flexible price, variable price, you can just put something here or leave it blank, doesn't matter. So in this case, let's say I'm going to sell this, and the initial quantity in hand is 0 because we haven't bought it yet. So Samsung Galaxy right here, and let's say that we're going to sell it for $600, $599.99. and we're gonna buy this for very good price. Let's say $439.99. So we got a very good deal in here, and the income, whenever you sell this, it will go to income account, which is sales of product income right here, and then the cost of goods sold, we're going to maintain the inventory, it pulls out from here, and it'll post to your cost of goods sold expense account. So if you want to set up new product and services for invoicing, this is what you do. The first is product name, and if it is has to do with selling inventory, you got to do it here. And here's a product name here, and you can just copy this and paste it here. This is when you want to place an order. This is the information you need. You may want to send out a vendor purchase order, so you don't have to type it again. It will print like exactly like this. Or if they have a special reference number, you put it in here too. So basically this is about it. So once you click it, then then you have created new product code here. See right here. Okay, but you also want to buy this inventory first. So if you want to buy it, you have to go back to your vendor place. Let's say you want to save this for a moment. Save and close. So you save the invoice and you go in here, and let's say we're going to buy some Samsung Galaxy S4 from Samsung. There's no Samsung in here. Just add Samsung in here as a vendor. So when you do that, you will see here account details and item details. For products with inventory, this is where you go. So let's select the Samsung Galaxy in here. So we're going to buy, let's say, 100 units. Right here. So just save it. So now you have inventory. So we bought Samsung phones from Samsung. Now we have enough inventory. So where to go to find that inventory? You just go in here and products and services. So you will see Samsung. We have 99 because we already cut invoice for one. So we got 99 here, right here. Okay, so go back to invoicing again. So I just wanted to give you how to add product and services. So you know how to add product and services here. Product and services doesn't have to be inventory all the time. It could be just service, flat fee. It could be just service like sales right here. You can put any amount you want, or product if you're selling inventory. And if you want to sell inventory, you got to have QuickBooks Plus, QuickBooks Online Plus. If you have Essentials, you will need to upgrade your subscription to Plus. Okay, so we already cut one invoice. Let's create another one. So this one is for Dow. Let's sell another one. So Apple phone, Apple 5C, and Samsung in one invoice, like this. So this is the net 30, the invoicing date is here, and due date is here. And here's the invoice number. Save and close. Okay, so we got a picture now. So let's do another one. Google. Invoice number, as you can see here, previous invoice number was 1022. Now in sequence is 1023 now, the next number. So here's another one, Apple 5C, iPhone 5C, 5S, and add lines. And we're going to add Samsung Galaxy. Right here, it's closed. Okay, so if you click it here, it will tell you recent transactions right here. So now this is the invoicing part. Is basically you're sending out invoice by email or print by mail, and they will send you a check basically, or they could call you and pay by credit card too. So now let's look at the sales receipt. Okay, the form looks exactly like this. Let's create the invoice here. So let's do the Google one. We're going to sell to Google. Let's say the same thing. Apple 5C, iPhone 5S, and another one is Samsung Galaxy. Okay, so this is the sales receipt one. We're using sales receipt. That means they already paid you by some method of payment. Let's say they paid you by debit card right here, and we want to deposit to undeposited funds because we want to see the total deposits to your bank account. So let's just say, just to make a habit of using undeposited funds for a while. So this will make your bank reconciliation a lot easier. Uh, it will be easier to match with your bank download. So it makes your life a lot easier if you just use undeposited funds and try to match the total deposit to your bank deposit line. So let's close this one. Let's create another one. Let's create another invoice here. So let's say we want to do Intel. Let's say Intel wants to pay by credit card, MasterCard, and still default is deposit undeposited funds, and we're going to sell the same thing again. 5C, 5S. By the one person, you can't expand this. The form is locked in here, so you don't see everything here. Samsung Galaxy right here. So this company Intel pays you by credit card. Save and new. So that day, some other company also bought something. So let's say Intuit bought phones from you, and they wanted to pay by Visa. Right here, same thing. Remember, in this case, Intuit wants to pay by Visa card. All right, that one is done. Let's create another one. Let's say it's sold to Mark. So as you notice, we're selling phones to big companies only. So let's say Mark wants to pay you by PayPal. Right here, the PayPal. So the method of payment is PayPal, and it's still undeposited funds. Right here. All right, we're going to sell some to Microsoft, and they're also going to pay by American Express. So later on you will understand why we're doing so many invoices here, for example. So this is paid by American Express. Let's do another one. So this time we're going to sell to Qualcomm. Payment maker is PayPal. Product service, the same thing. So this time is PayPal. Okay, and then let's say you started your business selling phones on Amazon website. So if you know how Amazon works, you can sell the products over there, but when they pay you, they will subtract their fees, and then they pay you after fees. That's what they will deposit to your bank account. All right, let's sell another one here. So for Amazon, you may not need customer information. Depends how you want to set up. Let's just say this one, Jimmy Smith bought it from Amazon website. All right, so we don't have Amazon in here. Let's just add one Amazon here. Amazon is not a payment method. Basically, it'll deposit the money to your bank account. Let's just create one here for reference here. Still goes on deposited funds. Alright, so this should be enough to cover, move on to the next stage now. As you can see here, we have inventory going down here. So now the next step is receive payment. Let's click this one. Okay, so the receive payment. Let's see this one is Dell. We send them invoice and they send you a check. So let's say the payment method is check right here. Let's click this one and they pay the full amount, $17.99.97. If they made less payment, then you just change it here. You can change it here. So in this case, let's say they made full payment and the amount to credit is 0, and the reference number is the check number. Let's say it's 123 is the check number. So it's basically the payment received from Dell, paid by check. Check number is this, and it went to undeposited funds or clearing account. Right here. The save and close. You can do save and new right here. Save and new. Okay, and there's another one here. Dow here. Payment method, check. Check number 456. It still goes on deposited funds. And click here. See payment. See, they don't owe you money here. They already paid it. So let's click another one to see who owes you money here. Dow Google. So they owe you some money here. Outstanding transaction here. So let's say they also paid you by check. Check right here. Save and new. Okay. Let's see. Dow is done. Say Google here, if you owe some money. No, they don't owe you money. Intel, they don't owe you money. Intuit, they already paid. Let's say Jimmy Smith. Mark, they don't owe you money. Microsoft. This is the old one, so you can know this one for the moment. Okay, so they don't owe you money. So there's this, you can look at it here, who owes you money, go to customers, and it will tell you who owes you money here. So Microsoft, they have two open invoices, and look at, click it here. They already paid this one, so they'll just have one left in here. Okay, so now we went through here, invoice, receipt, payment, and also use sales receipt. Now it's time to deposit payments to the bank account here. So here's the bank deposit. As you can see here, all this, it went from sales to receive payment, or from sales directly to undeposited fund account. So these are all sitting undeposited funds, and you want to transfer to your bank deposit accounts. Okay, so let's just select the payment method here. Okay, see the Amazon, we come back to that one. The American Express, normally American Express, they will directly deposit to your bank account, and they may deduct your fees, or they may not. They may just fees as a separate line item. So let's just say they did deposit the full amount here, so you can just select that one. So when you go to your bank statement, you will see American Express depositing this much money. So let's say click it here, that's the one you want to start first. So in your bank account, you will see this much. So basically is you want to match with your bank deposit amount in your statement. So this is what you see in your statement. So that's your first payment. It's a separate payment. So that's done. And you received these 3 checks in one day, and you decided to make a deposit slip for all 3 checks combined. So let's click all 3. So in your bank statement, you should see 5399.91. That's your deposit slip. Right here, total deposit slip is that much. So you select that one. So three checks, you went to the bank and wrote just one deposit slip, and your bank statement, you will see 5399.91. So it should match. This number should match with your bank deposit amount. So let's close this, save and new. Okay, so that one is done. So now the debit card, the Google page about debit card. So it's debit card, it's basically they will deposit the same amount right there to your bank account. So just say save and new, the same amount you see in your bank statement. Or if they combine with other credit cards, you can choose the same way. Let's just select this one first. Let's say it was a separate transaction. you will see this much amount in your bank statement. Now we're left with two credit cards here. So normally credit cards, you do the batch close. So end of the day, when you close the batch close, you should see this much amount deposited to your bank account. Not next day, maybe within 2-3 days, this is what you should see. So this is what you should see. So normally bank merchant service companies, they don't deduct fees right away. They will deduct this much, they will deposit this much that day, and then end of the month they may charge you for the merchant fees. So that's one way. Let's say you have a merchant account, they deduct your fees right away. And let's say your fees is about $100. So they deduct fees right here. You come here and subtract that deposit from your deposit. So the merchant account. So we don't have merchant account. We just create a merchant expense account. So the merchant account you could create as a cost of goods sold, or you could just treat as expense, and just like bank fees, you can just create as expense right here, bank charges, and you can just say merchant fees. Like this. Or you could treat this as your selling cost and make it part of your cost of goods sold, or the cost and services. So merchant fees right here. Merchant fees. And if you have sales, you will have merchant fees. If you don't have sales, there's no merchant fees. So it's like your cost of sales. So I personally like it should be treated as cost of sales. So either way, if you can treat expense as overhead or merchant fees as cost of sales. Either way that'll work. But if you are very sensitive to how much it's really costing you selling this product, it's better to put it right here as merchant fees. All right, let's save it here. And let's say this one for $3,600. Let's say it's about $100 fees. So you just put the negative amount here. So in your bank statement, or when you log into your bank account, you will see this much money deposited to your account. So because they subtracted $100 fee right there. Or if they're not deducting anything, they just put in the gross one, just save it as it is. Let's say in this case they deduct some money, the merchant fees. And it says $100. The whole key here is to match this total number, to your bank account deposit. That's the only way you can match when you do the bank fees. So when you download from your bank account, this is what you see, and this is what you're recording in your QuickBooks. Alright, so let's do save and close, and this one assuming they also deducting $100 from your account. So save and new. Now we are left with PayPal. PayPal is also same thing. They deduct fee, and then they will deposit to your PayPal account. Let's say that's what they did here. And in this case, let's say you want to treat PayPal as your bank account. So you select the PayPal account here, right here. So just treat PayPal as your bank account, in and out, deposit, withdrawal, whatever. So it's treated as bank account, separate bank account. So here's a PayPal account, and in here just click those two, or separate, doesn't make any difference. So you can, if you want to match with PayPal account, it's better to do just one at a time. So let's say same thing here, merchant fees, or you can say PayPal fees. Let's create another PayPal fees only. And same thing with this one. The treat as cost of goods sold, PayPal. PayPal fees right here. So PayPal fees and amount. Let's say for they charge like let's say $50. And when you log into PayPal account, but this is the amount you will see as credit to account, deposit to account, because they subtract the $50 and it will just show you this much as your deposit, and that's what you want to match. So here's this PayPal one, and remember you have created PayPal account and deposited fund payment to this PayPal account, and you're treating it as a separate bank account. It works better that way, and from there, of course, you will transfer to your banking checking account. So let's save this, save a new. We'll do the same thing in here, PayPal, and the account is PayPal fees. PayPal fees, that's your expense. Let's say another $50. And this is what you see in your PayPal account. So it's a gross minus your fees, and this is the amount you see in PayPal account. Okay, so after all those, we have only one left, and this is the form of payment is Amazon. So whenever Amazon makes payment, basically they will just deposit to your bank account, your checking account, whatever account you choose. All right, so here's the one. So Amazon, same thing. It's basically they will deduct their fees. So let's say we want to create another Amazon account, Amazon fees. So we don't have Amazon account, so add Amazon fees, same thing. We'll treat as Amazon fees as cost of sales. Right here. And let's say they also charge you $50. Actually, they may charge you more. Let's say they charge you $200. Like this. So here's your deposit. This is the amount you will see from Amazon making payment to your Chase checking account. Right here, save it, save and new. It's done. There's nothing there now. Deposit, bank deposits, all done. So when you come here, from here, we went through here, invoice, receipt payment, sales receipt, and everything was sitting here. Now if you click this one, the screen is clear now. There's nothing left. So everything went from undeposited funds to either your checking account or PayPal account, those two. So if you have more accounts, then you can just select wherever the payment went to. So let's close this one, and let's see your P&L, how it looks now. So let's go to reports and profit and loss. Right here, so you'll see like let's just do this month only. So as you can see here, so here is your product sales income. So Amazon fees right here, and the cost of goods sold, that's the selling your products, phones, that's what you paid, your actual first in price, and then the merchant fees and the PayPal fees right here. The merchant fees, basically they haven't billed you yet, so once you bill it, it will show up in here. So that's on the income side, profit and loss side. Now what's left from this chart here? We went through this, and this. So let's say some company just wanted to return the cell phone you sold. Let's say Dell just returned one cell phone. You don't like it. So you just issue create memo. Go in here. So the create memo, you originally issued invoice, and you just issue create memo here. They paid by check. They want money back by check. So Dell product is, let's say 5C right here. So save and new. So create memo, save. So now you owe them some money. So how do you pay it back now? So you just have to write a check. Go to vendors, click plus sign here, go to check, and you select your, in this case, it's not vendor, you want to pay to Dell, right here. So the account is what? It's accounts receivable. See right here, accounts receivable. Dell is your customer, and you should credit memo, so it's sitting in here as part of accounts receivable. So you select accounts receivable, and the price is $549.99. So your check number. Dale is your customer, writing check, refunding check for return item. So right here, save and close. It's done. So what if someone pays you by credit card and you create a sales receipt? You just go in here and refund receipt. Let's say someone paid by credit card right here, and you want to refund by your PayPal. Let's say they want to issue credit your PayPal account, so you can do that, or just the by checking account, debit card. So let's do PayPal. So like this. So save and close. So when you make payment, they also charge you, they may give you refund. So that one you have to, PayPal fees, so that one you have to deal separately. Okay, so that takes care of almost all types of invoicing, receiving payment, and bank deposit. And let's say you want to transfer money from PayPal to your bank account. What do? You just come here under other here. This is right below bank deposit. You just go to transfer from PayPal See, it says PayPal, you have this much money and you want to transfer to your checking account. Let's say you want to transfer $3,000. Done. So just save it. So from here, PayPal to checking account, done. So basically, we cover everything you need to know about invoicing and receiving payments. And these two is basically if you have to receive credit and just want to, it's a non-posting type at this time, but just want to show some record in QuickBooks. So this is where you go, delayed credit and delayed charge. Once you're ready to make the payment, then you move on to the next stage here. The estimate is basically if you're bidding on something, this is where you use the estimate, and from estimate you can create invoice, but estimate they don't accept a partial shipment. So if you once you use estimate, although even if you ship partial, create partial invoice, it'll the estimate it'll it'll treat it as full, and they will close this estimate. So it's basically good for one time only. Now let's go back to our original chart here. So by this time you should be familiar with invoice, receipt, bank deposit. If it's not, if it's sales receipt, it's basically sales receipt, bank deposit. And now when you download all your banking transactions, all you have to do is match. No need to add because we deposited to the bank to match with the downloaded transactions. So that was the whole idea here. Bank deposit match with the bank downloaded transactions. So no need to add. If you add, then you will duplicate income and it will be another mess. So basically stay with this flow chart here, invoicing flow chart. Invoice 1, receive payment 2, bank deposit 3, and when you have bank feeds, basically just try to match. It should match, uh, and that's about it. And even if it doesn't match for whatever reason, you can just exclude those transactions because we have already recorded in here all the transactions in here. So that's about it. Thanks for watching, and make sure to like us or subscribe our videos. We have more videos coming every month.